I'd like to ask you if you believe if the market has turned such that people no longer regret the last deal they did buy.
Yeah, I think it has. I would say Labor Day is when things turned. I think there are a whole host of reasons, one of which is the cost of capital has come down. Unfortunately, I had two favorite slides. My other favorite slide didn't make the cut. But what it shows you is the spread on CMBS spreads. And so the pricing on CMBS. And for any of you who follow it, it's come down dramatically. I look at what you can now get mortgage debt. Insurance companies, our guys are out in the market, and we're hearing 7s, and I've even heard some 6s on the good stuff. So the cost of capital has certainly come down. Look at what the REITs have done. 20+ billion has been raised on the equity side, unsecured debt. So the pricing has come down, and their availability, and there's all unsecured debt. So the pricing has come down, and their availability, and there's a lot of opportunity cash sitting out there, and they are chomping at the bid. I'll say more about that in a moment.
Great, thanks, Ross. Maria?
I would agree. I think things are easing a little bit. You see it we've seen it in the statistics for the third quarter in the leasing market, where leasing activity is up a bit. It's still down significantly year over year. I think that in terms of cap rates, it's still very much a guessing game, and deals are being done on a price per square foot basis. So I think that we're starting to see a little bit of wavering that really gives us an indication that we're close to, if not at the bottom. There'll be some softness next year. But I also agree that there are quite a few equity players out there who are just sitting poised and waiting.
Great, thanks.
The money's on the sidelines. And the point, if a real recovery in our sector of the economy was starting to build up steam, I think you'd see a lot of that equity coming into the game. The problem is that the money, by and large, is still on the sideline. So if people thought the kinds of returns that met their expectations were out there in the marketplace, there's plenty of cash. I deal day in and day out the last 6 months with banks, helping them with their specific problems. And I'll hear this again and again and again from the banks. We actually have quite a bit of cash. However, instead of lending it, we're holding it for something. And one has to believe that they're hoping for either a recovery to the market or they're holding it for a better opportunity. So there's plenty of cash out there, I think, in the marketplace for the purchase of commercial real estate. The problem is I don't see the triggers in the marketplace that cause things to happen. Underlying that is the conditions that the banks are now placing on obtaining that equity in order to carry out deals. I don't know too many developers that actually want to sign personally for notes.
Definitely the credit markets are loosening. In February, if you got a quote, you probably were at 8% plus at 55 LTV. Today, that same deal might be priced at 6.25 at 65% LTV. So the credit markets are definitely loosening. However, you still have the buyers. It's really core buyers looking for core deals, which are hard to come by. There's still a significant disconnect between bid and ask, which is why you're not seeing a lot of transaction velocity, even though the credit markets have loosened up a little bit. Nobody's willing to take down a big deal. So those deals that are trading are usually the smaller deals. And they're usually private buyers, buying core deals at a discount to replacement cost, price per pound deals. And those are really the only deals that are getting done right now. If you're a private buyer with good banking relationships, you'll get those done.
Medical, we've heard the same thing. Medical office cap rates have come down by about 25 basis points in the last 30 to 60 days. But I think to say that the capital markets have loosened up to the point where people don't regret their last deal is a stretch. I think people who bought properties in probably 05, 06, certainly 06, and the first half of 07 paid too much.
Great.